Good evening, I'm Giuseppe Basile. I'm the analyst and trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening. Today is Monday, May the 26th, 2014. It's 9:30 p.m. time in Toronto, and this video is a special video I'm recording because I had a request of one of my followers who actually is trapped in a euro-dollar long, and I'm not going to provide the details, of course, but I thought that I would record a detailed analysis of the euro-dollar to try to help this person to get out from longs and try to manage his position at the best possible. Now I think other people might be in the same situation, so that's why I'm going to share this with everybody and write a little story about this. Now what you see on the screen is the euro dollar, and we know that this market likes to move in extensions, so especially on the short side. So when that happens excuse me, what I expect is that this market continues to move in extension. So on the daily time frame, you will remember that we modeled the latest measured move short from 137.40. Now this level was front run here, and as I'll show you in a moment, there is a better level on the 4-hour chart that might explain this move lower. If this market started the move higher, there's a possibility for this market to retrace into the all the way from the same anchor to shorts, and this would be the 37.24. It could be lower, 37.20, and then start a move lower again. If this market gives us a gift, it could go up into the all the way halfway back. To be honest, I don't think this market has the strength to retrace there. It does not mean it cannot happen, but I don't want to feed here hopes that this market is going to get there. So if he gets to 137.20, 137.15, I think if you're trapped in a euro long, and maybe you're trapped from higher prices, you want to exit your position and take your loss there. I know it's difficult. Ask me why. It happened to me in the past a number of times. I don't allow myself to get in those situations anymore, but it happened to me, so I know how you feel. I know that you don't want to lose your money and close the position, but in this situation, that's the best thing to do, and it's a costly lesson. Take that as a lesson. Consider mentoring, considering working with someone who has a better understanding of market structure. And it's tough, I understand it's difficult, but sometimes there are no other options, and the only options is to get a margin call and be wiped out. So sometimes it's good to take a sizable loss rather than be wiped out. And I know that a lot of people, that's not what they like to hear. They would like to hear from me that this market is gonna correct to 137.20 or even 138 level. There's no guarantee. I wouldn't hope on that. So if this market correct back into 137.20 here, take that opportunity to exit and take your loss, and that's the best thing you might really do in this market. Is there a possibility to get into 138.04? Yes, of course there is, but based on how this market moves when it starts moving on the downside, and you can see if you go back to previous price action here, you see here at the beginning of 2013, and if you go back and let me see, we go back to 4 years here, and I can show you that when this market start moving lower, it starts moving lower in extension. Eventually it's going to retrace, but that might be too late, and it's not guaranteed that the market will just do what it did in April 2011. So do not have expectations, have the worst anticipations in this case. So let's go and move into the 4-hour chart and see whether we can actually model this move a little bit better. From the daily chart I use this level, but the market might well be using another level on the 4-hour chart, and we have to look at this level. And the reason for this is this trace worked very, very well. We saw participation to the pip here at this 137.30 area, and the price went 6 pip to the target, and I'm gonna show you this to you. Let's put just 1% here. As you can see, the 136.08 was the level, and I think we went to 14 here. So there was 6 pips, and we could consider this target hit. Now, if that's the case, the 4-hour chart is giving us even a lower level. So before on the daily chart we saw 137.20. Now we have a lower level here, and that would be 137.10-15 here. So I would consider myself lucky if the market gets to that level. Again, you can hope that the market is gonna move higher, but we have no certainty about that, and I certainly cannot tell you for sure where the market is going to move. The last thing I want to do is I want to study the sequence of measure move higher, and you know that in this situation the fib stalking technique, the technique that I use to test support and resistance, and the break of measure moves on the 15 time frame may be very, very handy. And when I look at this move, I see this move higher, very steady here in the 15 minutes. So the first thing I do, I think of extensions, and as you can see here, I want to stick to this level here because this gives us a little bit more confirmation. So the market is moving in extension, found participation on the 15 minutes in the 36.32, and it brought price into first target. We saw profit taking here, and then again maybe on the actual results of the European elections, we saw this market moving higher. And as you can see, apparently the move higher is continuing, which is good if you're trapped in a long. However, we have to be realistic as well, and what I'm going to do in this market, I'm going to trace this measure move, and actually if the market does not fall below 136.53, then we can hope this market will actually continue higher. Of course, there is another level that is trading at the moment. It's not that level, but it's probably the high at 136.47. So I would keep in mind both levels, although clearly the market is reacting at the higher level here, and there is the potential for this market to get right into that that 136.73 here level, and then even higher 136.82. Clearly if you entered in the 38 around the 38 area, that might not be enough for you, but you can continue tracing this sequence of measure move here, and if the price gets into the 136.82, you may consider exiting part of your position, and you might consider that, and actually keep tracing the sequence of measure move higher, and when it breaks, that would be a signal to exit. So unfortunately, it's not an easy situation, and and there is not really a lot that can be done here. Of course, the market can continue higher and actually break this level as well. The safer thing is probably to follow the sequence of measured move, but I want you to be very, very realistic. I don't believe this market is going to make it well above this 137 excuse me, 137.40. So be very realistic here. I hope this video helps, and be very careful. The euro is in shorts, and there is really not a lot we can do here, and hope is not a strategy. Be very realistic. Better to get a sensible loss rather than getting wiped out due to a margin call. So there is still a possibility for this market to move higher. Once we break the sequence of measurement more than 15 minutes, that's the signal to exit the longs and get the loss. I know it's not the best of the worlds here, and not what you would like to hear, but that's the harsh reality of trading, and I think there is a very important lesson to be learned here. Don't put your own earned money in the markets before you understand how the market works. The market is not a place where you can do a quick buck. It's not a place where you can turn 5,000s or 10,000s into hundreds of thousands. It doesn't work like that. Don't use leverage. The formula to make money in the market is to learn and spend time and work hard to actually make the 2, the 3, also the 5% every month, and then with time scale and start managing other people's money as well. That's the formula to make money in the markets. It's not getting the 5,000s or the 10,000s and multiplying it overnight with a very high leverage and maybe in the wrong situation, the wrong market. So I'm very sorry to be realistic and blunt here. I wish you, of course, all the best. I hope this video helped, and I hope that you will actually exit successfully this position. Even taking a loss, it's tough, I know. Ask me why. I know it very, very, very well, and it happened to me a lot of time. So, and that's one of the reasons why I do what I do, to help traders to avoid this situation, avoid as much as possible this situation. I wish you all the best, and I hope the situation will resolve for the better. Thank you very much, and have a great evening. Bye bye now.